The world is looking to India, now at the helm of G20, to energize global partnership in several critical areas. This reminds me of what Mahatma Gandhi had said. I do believe, and I quote, I do believe that India can make a lasting contribution to the peace and solid progress of the world, unquote.
An optimistic beginning to the RBI governor's statement on the first monetary policy after the union budget, soon followed by concerns over the one economic indicator religiously tracked by policymakers at the Reserve Bank of India.
Headline inflation has moderated with negative momentum in November and December. We need to see a decisive moderation in inflation. We have to remain unwavering in our commitment to bring down CPI headline inflation. Thus, monetary policy has to be tailored to ensuring a durable disinflation process. A rate hike of 25 basis points is therefore considered as appropriate at the current juncture.
According to the RBI, inflation this fiscal is expected at 6.5%, much above the target of 4%. For 2023-24, the central bank has estimated a figure of 5.3%, which still is much higher than the RBI comfort level. This sustained inflation is the big reason RBI has decided to continue with its task of withdrawing excess liquidity from the market. The RBI hiked repo rate by another 25 basis points to a 4.5-year high of 6.5%. The decision steered in part by global outlook.
The global economic outlook does not look as grim now as it did a few months ago. Growth prospects in major economies have improved, while inflation is on a descent, though inflation still remains well above the target in major economies.
The repo rate hike adds to the fastest ever escalation in cost of money. The hikes began in May 2022 when repo rate was at 4%. 6 hikes later, the benchmark rate is at 6.5%. Though the pace of hikes has slackened from half a percentage point to 35 basis points in the December policy to a quarter point now. The sustained rate hikes and the fight against inflation may have compromised on economic growth though. The RBI has forecast a growth rate of 6.4% in 2023-24, which is lower than what the economic survey projected just 9 days ago. It is also much lower than the 7% GDP growth expected in 2022-23.
According to our surveys, manufacturing, services and infrastructure sector firms are optimistic about the business outlook. On the other hand, protracted geopolitical tensions, tightening global financial conditions, and slowing external demand may continue as downside risks to domestic output.
According to the governor, additional capacities are being created in the steel, cement, mining and chemical sector. Higher Rabi output is expected to cool food prices. The central bank is seeing sustained demand in contact-based services, and the massive capex push by the government is keeping money flowing in the system. Interestingly, the US Federal Reserve had also slowed the pace of its rate hikes, boosting hope that the cycle could end soon globally. Bureau Report, Business Today Television.
If you like the video, do like, comment, share and subscribe.